Hey folks, welcome to the first session of Audit and Assurance, previously known as F8. In this session, we will look at the very first chapter of F8, that is Audit and Other Assurance Engagement. And before uh, we know what is audit, we need to know that why audit is needed. So for this, I will tell you a small story of this guy who is known as Papu. Okay, so Papu started his business, all right? Till this point, his business growth, his business grow, and then the growth of his business stopped at this level, right? Why stop? Because of physical limitation, mental limitation, and most importantly, the finance limitation. So he decided to involve partner with him. Now he got new partners in the business. They injected the funds in it, and now again, business started to grow again till this level. But again, the growth stops. Now, what they decided? They decided to list their company in the stock exchange. So when they listed the company, obviously now it has an involvement of whom? The shareholders, right? So now suppose that the accounting period of the organization is from 1st January to 31st December. On year end 31st December, directors prepared the financial statement and presented to whom? They prepared the financial statement and presented to shareholders. So after looking at the financial statements, shareholders asked the question. What's the question? That what's the guarantee that this financial statement is absolutely correct? So director said, what director replied? Director replied that it can't be absolutely correct. It can't be absolutely correct. So shareholders said that then why did we hire you? So director replied, hold on, buddy. Actually, this uh, financial contains a lot of estimates, right? Such as the bad debt, such as the provisions, etc. And estimates to change time to time. They do change time to time. So that's why we can't give you absolute assurance. So directors, shareholder asked that, and what you will say, director said that we will give you a reasonable assurance. Shareholder asks that what's the guarantee that this financial statement is reasonably presents to and review. One of the directors, one of the peon, the office staff came in to give a tea to a director in the meeting. So director asked him, tell these guys that there is any instance you notice that I cheated or did commit any kind of fraud. Peon said, office boy said that these guys are so honest that they always gave me my salary on time. Shareholder said, we can't believe on him. Second director's wife came in to give him a lunch. So he asked his wife to tell those shareholders that if he did something wrong ever, she said he's such an innocent guy. He never looked at the other guy. He never had an eye on the other guy, other girls. So how can be he? How can he cheat? How can he do fraud? He's so honest person. Shareholder said we can't believe on her. So third directors used to play football on the street, right? And one guy came to take the funds from him for the match, right? So he asked that boy that tell them that if I'm the cheater, the boy said The uncle is so honest person. Whenever whatever we say to him, he just agrees. So how can he be a cheater? Again, shareholder said that we cannot believe on him, right? So directors got frustrated, irritated, and asked to whom you will believe. Shareholder said that a person who is neutral, a person who is independent, and the person who will have the knowledge of who will have the knowledge, not knowledge of what? Knowledge of IAS, IFRSs. If we give us the assurance, then we will believe that this financial presents are reasonably true and fair, right? So that's why now it gives rise to a need of auditor, right? So I hope now you get that what is the need of audit. Now, next thing, what is audit? What is audit? What is audit? An audit is an independent examination of financial statement to express an opinion whether financial statement presents true and fair view in all material aspects, right? So we look at the definition of audit. Just now, let me elaborate this definition in detail. What it's saying, an audit is an independent examination, not dependent, but the independent examination. It's examination, not investigation. Right. So let me tell you the difference between the both who do not know it. You will find out what's the difference between examination and investigation. Let me give you example. You guys go to the examinations of ACCA. What they will check you outside of the gate, and then they will keep an eye on you, right? That's an examination. Now if they find your fraud, that you're cheating, they will keep investigate, they will keep asking you a question, they will keep checking you. That's the investigation. Investigations comes after they find you cheating, they find you doing the fraud. Now agencies will be involved, the authorities will be involved in it. That process is the investigation, not the examination, right? So, so it is the examination of financial statement to express an opinion whether financial statement presents a true and fair view. What is true means? True means that all the information which is present in the books, which books, sales day book, purchase day book, journal ledgers, etc., are actually present in the financial statement. That this is what true means. And what is means by fair, that there is no bias and discrimination, right? And then finally, what it's saying, it presents true and fair view in all material aspects. That means, point to be noted, that means definition itself says that be ready, material statements can be there. So this is what is audit, right? I hope you got it. Now let us discuss the some advantages and disadvantages of audit. So what are the advantages of audit? Sleeping partner, will be more confident about their about the investment, right? Now there will be tax authorities will find financial statement more reliable, right? What else is the definition of the advantage? Internal controls weaknesses can be identified. Employees will be more confident about their future, their career, right? Now, what can be the disadvantages? What can be the disadvantages of audit? Well, the disadvantages of the audit can be uh, audit is can be costly, right? Uh, Auditor is a human itself, so he can make a human error. What's more, there can be collusion between auditor and management, right? Auditor has limited resources, right? What does it mean? That audit process need to be done in just 3 months, and they have to examine the work of three of a one complete year in just 3 months. So many things can be overlooked, right? These are the disadvantages. I hope you get it. Now, let us discuss about the another concept, which is assurance engagement. What is assurance engagement? It is a tri-party relationship between whom? Intended user, responsible party, practitioner, subject matter, evidence, and the criteria are the other elements of this. Now, to make you understand it, let me give you an example, right? Suppose you, it's you, it's your friend, went to a shop, right? This shop, you went to this shop, right? And here is the shopkeeper, right? Now, you ask your friend that, how's this shirt? How's this shirt? Your friend said that this shirt is very expensive. You said, listen, I don't have any problem about the money. I don't have any financial problems. I can afford it if it's expensive as well. I'm asking you in terms of color, in terms of its fabric, its design, etc. Uh, so give me your opinion, right? So in this case, who you are actually, you are the intended user who are the potential user of this shirt. Then who is your friend? Your friend is actually the practitioner, the expert who has to give you opinion on this shirt, and then finally, who is this guy? Is guy who is responsible for this product, this shirt, is the responsible party. And this shirt about which you are asking the opinion is actually the subject matter, right? The color, the design, fabric is the criteria on which basis your friend has to give the evidence, collect the evidence and give you the opinion. So this whole process is known as assurance engagement. Now, you might be wondering and you might be about to ask that, please give me the example in terms of corporate world, right? So here it is the financial statements, right? And this financial statement is actually the subject matter, right? This financial statement is the subject matter, right? So in this case, the shareholder gonna be a intended user, the practitioner gonna be an auditor, right? The responsible gonna be a party, gonna be a directors. And what gonna be a criteria? Criteria gonna be a IAS, IFRS will be the criteria on which basis auditor will collect the evidences and give the opinion to the shareholders of the company about the financial statements. That's assurance engagement. I hope you get it. Now, lastly, then I hope it's clear as well. Now, move to the other part. Move to the other part about the other assurance engagements. What is positive assurance? Positive assurance is the it is actually the audit, right? And why it is called positive assurance? Because it is detailed, right? It is detailed. It contains the test of controls. It contains the substantive procedures. Okay, it contains the it is detailed. It's just like in Worm's eye view, which you because you look at the auditors look at everything in detail, right? So this is positive assurance, and why another reason why it's known as positive assurance, because while giving the opinion, auditor will use the wording like this: based on our audit, this financial statement presents true and fair view. Okay. Then we have next word, review. Review, actually known as negative assurance. Why so? Because it is less detailed, right? Auditor will use only test of controls in it, no substantive procedures. It's just like a bird's eye view, because they will look at the details in less detail, and the wordings on review engagement will be used like this, that nothing has come to our attention that cause us to believe that this financial statement does not present true and true and fair view. Okay. Next type of engagement is actually agreed upon procedures. Now, what is agreed upon procedures? Well, agreed upon procedures are the special kind of assignments which come on a special requests of the clients, right, in which they apply specific procedures. There will be no opinion on it. Right now, you might be wondering, you might be asking for the example. So let me give you an example. For example, you went to take the bank loan, and bank, before giving you the loan, bank asks you to present them the uh, audit of specific components of the financial statement, such as the audited receivable component or the payables component or the inventory components, etc. So you will go to the firm. You will ask them, please audit these components of the financial statements, receivables, payables, or inventory, whatever. And so what they will do, they will apply their specific procedures on them. They will just stamp it as audited. They will not give any opinion on it. This is known as agreed upon procedures. Next is compilation engagement. Now, what is compilation engagement? Compilation engagement is special. It is work that they are outsourcing of specific function of organization. Firm will charge a fee and they will provide services. There will be no opinion on it. For example, uh, you went to a client, okay, you went to a sorry, you for example, you don't have the services of tax or the advisory, etc. You went to a firm and asked them, please, we don't have the tax experts in our company, or internal audit experts in our company, please provide these services to us. They will send their boys, they will work for you, they will charge a fee for their services. They will not provide any opinion on it. This is compilation engagement. I hope you got it. And this is the first area of the our F8 audit assurance paper. I hope you get it. See you in the next lesson. Bye.